Welcome back, traders. Good morning to you, and welcome to another very important trading day for us all traders as we anticipate a very high impact full event for today. So in this session, we are going to be, as usual, diving into an insightful but exciting analysis of the handful of financial instruments that we have been monitoring since the beginning of the week, and these are the USDJPY, the USOilSPOT, the XAUUSD, and of course the GBPUSD. So we are going to be going through a comprehensive price action perspective as we explore the recent movements and chart patterns of this instrument. And we're also going to be uncovering key insights that can potentially shape our trading decision ahead of both the London and New York session today. And for those who are joining us for the first time, you are highly welcome on board. I'm very excited to have you guys around as we come here together to prepare for the New York and the London session. So what we simply do here is to do a follow-up detail on the instrument on our watch list. This is on a daily basis, and this is basically on the 1 hour time frame. So if you want to understand how we got to this point, how we got to the structures you're seeing on our 1 hour time frame, then it is very important that you watch the videos I shared during the course of the weekend, as I was able to do a top-down technical analysis, very simple to understand technical analysis on this instrument. And this was our projection ahead of the beginning of the week, and since then we have been monitoring and doing follow-up details on this instrument. So the link to this instrument are right in the description box of this current video you are watching, and I've made it a little bit more simpler for you to navigate through to whichever center of focus you want to be looking at. So it's duly timestamped, so don't worry, so you can easily navigate to whichever area you want to be. All right, I can see Bieku. I hope I pronounced your name correctly. Thank you very much. I just had to put this one on this morning. I'm wearing my native attire, so I just felt let me just go native today. I hope you liked it. All right, everyone. So that is what we simply do here on a daily basis. So you are welcome on board. If you have anything that you want us to do to improve the session, please let me know in the comment section. So let's confirm that we are good to go. Can you hear me very well? I don't want the situation we had yesterday. In fact, when I went through the video yesterday, I saw that there was a lot of crackling sound, and that is why it took me quite some time to come online, as I had to do some tests, retest, rerun, and everything just to make our experience as splendid as possible. So if you detect any audio issues or visual issues, feel free to let me know in the comment section, as this goes a long way in helping me to make your experience as better as possible. So with that being said here, let's dive right into the business for today. And you know how we do it. The first thing we are going to be doing this morning is to check the economic calendar to see what majority in the market are looking forward to for today. And you know how important the economic calendar is. These fundamental factors often manifest on the chart in technical patterns and price movement. And by monitoring the economic calendar, we can identify potential correlations between the key economic releases and specific technical patterns that we can use to position ourselves ahead and even during and post this event. So this is why we normally check the economic calendar. So with that being said, let's dive right into the economic calendar and let's see what we are looking forward to. And you know how we do it. We normally focus on high impact events affecting the instrument we are monitoring, the pound sterling, the Japanese yen, and of course the US dollar. So for today, Wednesday, June 14th, you can see that the day is really jam-packed with a whole lot of high impact event. We have almost 8 releases today, and this is going to be having a major impact on price movement today. And we are going to be anticipating some volatility. So it's very appropriate that we position ourselves ahead of this so that we can actually be in the trade when this whole situation is running. So for today, we have the first event is coming up in about how many hours from now? I think about 9 to 10 hours from now. And that's the Fed interest rate decision. So we are going to be looking forward to what the actual data is going to be like, as we have a projection of a 25 base. We have a projection that there will not be any rate hike for today. So we are going to be looking forward to see how this is going to be impacting the market in anticipation of this event. Are we going to have a rate hike, or are we going to be having a stall as expected? So this is what we are going to be looking forward to, as majority in the market are even at this point very unsure of what will really happen based on the mixed fundamental factors that has been released in the last couple of weeks. So we are going to be looking forward to that one too, and put that into consideration while we review our current positions. Then we also have the monetary policy statements. The monetary policy statement influences the volatility of the US dollar and determine a short-term positive or negative trend. So it's something we are also going to be looking forward to today. Then we also have the FOMC economic projection, and this includes the projection for inflation and economic growth over the next 2 years, and more importantly, a breakdown of individual FOMC members' interest rate forecast. Another very high impact event there. Then we also have the interest rate projection. This publication summarizes policymakers' outlook for federal funds rate, GDP data, consumer consumption expenditure, inflation, and it is widely used as a guide to figure out the location of terminal rate and the possible timing of policy pivot. So we have a whole lot of them, and all this data here are coming in simultaneously. And to top it all, we have the FOMC press conference, where it's about an hour long, and the press conference is open to press questions and answers. So it's another high impact event we are going to be looking forward to. So you can see here that all these events are coming in simultaneously, and this is quite something big, and we're going to be having a lot of activity today, and I hope that we are able to catch any potential trading opportunity and be in the market even before the event starts. So that is that on the economic calendar, as you can see. So with the information we have gathered here, let's dive right into the current market structure and look at things from a price action based technical analysis. I see your comment, Kingsley. Thank you very much for that feedback. I really appreciate that. Arashi, good morning to you. Thank you very much. Kwakwa Name, good morning to you. Thank you very much. So I'm glad that the sound quality is quite good. Please let me know if there are any crackling sound, just like you saw yesterday, so that I can do the necessary adjustment. All right, so with that being said here, we are going to be diving right into the first instrument for today. In fact, we have been quite profitable on most of the instrument we have been monitoring, and I'm very sure we are all on the positive side of our portfolio this week. So the first commodity we are going to be looking at this morning is going to be the US oil spot, as usual. And on the US oil spot, we had quite an interesting setup since the beginning of this week. So let's look at how the week started for us on the US oil spot. And one thing we observed here at the beginning of the week was how price action was initially ranging between the $70.20 level, as you can see here, and the support line at the $69.30 level. And this was where price action was at the beginning of the week, giving us a very beautiful and simple setup to work with for the week. And you know how we do it whenever we have this kind of simple setup. We want to wait for price action to either break out of the resistance line for an opportunity to buy, or break down the support line for an opportunity to sell. And in fact, prior to our live session on Monday, we saw the breakdown of that support line, which gave us a signal that we might likely be having a bearish turn, at least for the first half of this week. And this was exactly what happened. We saw price action drop to the downside, and this was even prior to the live session on Monday, so we missed out on that one. And we said here that we are going to be waiting for a new structure to mature for us to join that move. And one of the things we agreed on here on Monday morning was that we are going to be waiting for either price action to retest the $69.30 level, the level that was broken on that day, to incite a bearish move to the downside, or wait for price action to come into the trend line to incite a bearish move. And that was where price action got to. And one thing we did here to help us to be able to be precise in our entries was to scale down into the 15 minutes time frame, where we were able to spot a level that we were going to be using to enter that position. So this is what we saw on the 15 minutes time frame on Monday. We saw this trend line. We had a couple of structures here. We had a trend line where we said a breakdown retest will definitely give us the opportunity to sell. And then we also have that level sitting at the $68.60 area, where we had our sell stop order, which was triggered in due time, and price action since then moved over 160 pips in profit. And we also had the privilege of maximizing the bearish potential there by adding more position at the breakdown of the $67.80 level, giving us about 80 pips in profit too as well. So as at the beginning of the week, we were already on the positive side of our portfolio, as we were able to scoop over 200 pips on that single sell position we had there. And following that, yesterday we saw a very simple setup as well that we said we are going to be using to guide our trading activity. And one of the things we saw here yesterday was the fact that as soon as price action got into that area around the $67 level, we begin to see some buy pressure resume around that area. And as a result of this one, we identified that level as a temporary demand zone, hoping that it will be a platform upon which buyers might likely leave on to incite a strong bullish momentum to the upside. So as a result of this, we were expecting a bullish momentum yesterday, and coupled with that, we also had the higher lows connected to give us a trend line to work with. So we had this trend line here, and we said as long as price action remains above this trend line, we shall continue to remain comfortable in a buy position, while we also look out for more opportunities to buy the USOilSPOT. And to help us for our entry, this was what we were using yesterday. So we had a $67.80 level, where we said a breakout retest of this level is going to be triggering our buy position. And this was exactly what happened. And we saw price action breakout retest that structure, give us a couple of retests actually to give us the chance to join that move. And since then, price action has moved significantly well in our favor. If you look at what we have here, since the breakout of that structure yesterday, price action has moved over 3.8% growth here to about 250 pips in profit on that first position. Then remember, we also identified a structure here had a $68.63 level, where we said we are also going to be adding more position at the breakout retest of that level. And this is exactly what happened. As you see here, on that 1-2, we had price action has moved over 170 pips. So throughout the course of this week, we have been very, very profitable on the USOilSPOT. No stop losses at all, no losses at all on this one. It's just profit and profit. So well done to everyone who has been part of this profitable journey on the USOilSPOT. By now, I hope that you're already out of all these positions, but if you are still in this position trying to maximize the potential of this move, then trust me, it is high time you started moving your stop losses to secure your current buy position. So this morning, I shared an update on the USOilSPOT. So let's quickly run through my commentaries this morning on the USOilSPOT before we go into the details on the live chat. So here we are on the on my TradingView platform. I also shared this on my Telegram platform too as well. So we have this one sorted this morning, where I explained how we are going to be making a decision for today. So I said here that the price movement has returned to the initial range from the beginning of the week. Remember, we had a range at the beginning of the week. We are going to be looking at that in a moment. And I stayed within the $70.10 level and the $69.30 level for the past 16 hours, which further emphasized the level of indecision in the market at that point. So to find potential trading opportunities, we will wait for a clear signal, either a breakout or breakdown of this range. We will discuss this topic extensively in our upcoming live session. So I said here that if you currently hold buy position, it is recommended to secure them in due time. So that was my view here this morning on the USOilSPOT, and let's look at what I was trying to explain here. So this was the structure we saw here at the beginning of today, and this was the range I was talking about in my comments. I said here that price action was back into that range and since been consolidating within that area to emphasize the level of indecision at that point. So with the structure here, and you know how we do it, whenever price action is caught within a range like this, we have no other choice than to remain patient, waiting for a signal to mature, and as a result of that, we are going to be having a buy stop order above the $70.10 level and a sell stop order below the $69.30 area to trigger any of these opportunities. And as you can see here, we already have a buy position triggered right now and currently running with about how many pips now? About 23 pips in profit at this point. And the reason why we had the buy stop here, we've been profitable so far this week, so we could still afford to risk some of the we can still afford to leverage on some of the profit we've made so far this week to test waters around that area to see if a buy position could click at that point. So at this point in time, we are already in the buy position. If you are not, well, it's okay. Let's see if the market will do some retest of structure for us to be part of another opportunity on this one. So let's see how price action plays out above that $70 area. And remember that we have a bullish trend line which has been supporting this bullish momentum since the beginning of this week, where we identified a trend line after connecting the series of higher lows here. So we have a major trend line here which still tells us that we should still feel comfortable in our buy position as long as price action remains above the trend line. But it's still very possible that price could retrace back into the trend line, so we want to take that into consideration too as well while we continue to monitor price action. So even if price action drops at any point in time, taking us out of all our buy positions, and goes on to drop below the $69.30 level, is still not a sign for us to open a sell position yet, and the reason is simply because of this bullish trend line that we have here. So it now depends on how price action reacts to this trend line that will now determine if we are going to be joining a sell position there or probably get ready to buy the USOilSPOT. So if we do have buy pressure resume around this area, something like a double bottom structure on our lower time frame, continue buy pressure around that area, then we want to be looking out for opportunities to buy the USOilSPOT. But if price breaks down the trend line, then at this point we will start considering selling, as this will be the first time price action will be breaking down that trend line this week. So if that happens, we want to start considering selling, looking out for retest of structure in our lower time frame to join a sell-off in the market. So let's see how price action plays out from this current market structure. And trust me, I'm always with you in the comment section of both my TradingView and Telegram platform to give you updates as at when due. So if you have any questions regarding what I just explained so far, feel free to let me know in the comment section. Okay, so I will just take some 5 seconds to see if there are any questions before we move on to the next pair, because I noticed that there is a lag in the broadcast. So let's see what happens in the next 5 seconds, and then I will move on. All right. So in the absence of no questions, I want to assume we're on the same page here. So we shall be moving on to the next instrument on our watch list, which is the GBPUSD, right? So on the GBPUSD, we already have another buy position trigger this morning. So we are going to be looking at how that happened and what we said on our commentary this morning. So how did the week started for us on the GBPUSD? Well, right here we had First of all, I want to acknowledge our key level at the 1.259. And one thing again, please, for those who join us for the first time, like I said earlier, we are only treating the 1 hour time frame here. So if you want to see how we got to this point, how we identify these levels and structures and patterns, of course, you want to watch the video on this instrument we are monitoring in the comment section of this video. So I have the links there, so you might want to watch them so that you can have a better understanding and also learn from the technical perspective from which I am looking at the market. So at the beginning of the week, we acknowledged this key level. Okay, I saw a comment here. Kinsley Bleku is asking, with the USOilSPOT, we should wait for a retest to enter. Well, the trade has already been triggered, Kinsley. The trade has already been triggered. But if you had missed out on that opportunity, then a retest of structure should be confirming that buy position. So we've been very, very profitable on the USOilSPOT so far this week. So we could afford to test the waters using our buy stop order to trigger that position. So we can still leverage on some of the profits we had made so far this week to maximize or even see if the buy position around that area is going to click. So we are very profitable so far, so we can afford to risk. But if you had missed out on that opportunity, well, then you want to see price action move significantly well, then comes back to retest that structure to give you a confirmation that you want to buy. So that is how we are going to be trading it. Okay, so back into the GBPUSD. So I said here that we are going to be we had a key level at the beginning of the week, which was around the 1.25900 level. And you know how we use our key level in this community. If price action remains below the key level, we want to look out for patterns and structures that will support an opportunity to sell. While a breakout of that key level will definitely give us patterns and structures that we will want to be looking out for to buy the instrument or asset we are monitoring. And with the situation we had here, you will see that during the first half of this week, price action was most of the time below the key level, giving us the privilege of being part of a sell position on Monday. So this was what we saw at the beginning of the week. We saw a channel where price action was initially ranging between the 1.25850 and the 1.25650 level. And with this kind of situation, you know how we do it. We want to wait patiently for structures to mature, either in the form of a breakout of the resistance line for an opportunity to buy, or the breakdown of the support line for an opportunity to sell. And with what we saw here on Monday, we initially had a buy position triggered here, and this was prior to the live session. And I told us all that we want to be moving all stop losses to break even to secure that position, as anything could still happen. And in addition to that advice, I said here that we have a trend line which we are going to be using to guide our trading activity on Monday. So we said if price remains above the trend line, we want to look out for more opportunities to buy. But if price action drops below the trend line, breakdown, retest, we want to be selling. And this was exactly what happened on Monday. We saw the breakdown retest on our lower time frame, and it was at this point we had our first sell position for the week. And we also had the privilege of adding more positions, had the breakdown of the 1.25650 with a sell stop order below that level and a sell stop order below the 1.25400. We were able to maximize the potential of that bearish move. And as you can see, the first position gave us about 90 pips. The second position gave us about 70 to 80 pips on that one. And then the third position gave us about 50 pips. So at the first day of the week, we were already profitable, which was against all odds. Then we begin to see the buy pressure resume after price action tested the 1.249, though we missed out on that one, as we were expecting that this might likely be a retracement of the impulsive bearish move that started this week. And as a result of that one, we had this level connected. So we had a trend line to guide our, okay, I think I just identified this one this morning. So yesterday we had this simple structure which I shared on my public platform, where price action was ranging between the 1.25770 and the 1.25540 area to give us a consolidation phase where we were waiting for a breakout or breakdown of that structure. So we had the breakout happen just during the New York session yesterday. breakout retest, in fact, and price action moved in our favor. And since then, we can see price action is currently running with about 58 to 60 pips in profit at this point. So for those who took advantage of this opportunity, well done to you for being on standby to catch this one. So going into the London and New York session today, what is going to be our plans here? So I shared a commentary on the GBPUSD this morning. So let's quickly run through what I said here this morning as regards to how we are going to be positioning ourselves for today. So what I said here this morning, let's scroll down to the last one. All right, so this is what I said here this morning. I said the price movement has been confined within a range for the past 18 hours as traders shifted their focus to the FOMC meeting. Hoping for a catalyst to influence price direction, we will exercise patience and wait for either a breakout or breakdown to identify trading opportunities. Additionally, we will utilize the recently identified ascending trend line as a reference point to guide our trading activities for today. So as you can see, we have a new trend line here. So let's go back into the live chart. So I mentioned here that we are going to be anticipating either a breakout or breakdown. So with a buy stop order above the 1.26200 level, we already have another buy position triggered at this point, which is currently running with about how many pips is that now? About 12 pips in profit at this point. So this is still not a profit anyways for me, as we want to see how price action will still be reacting to that level. So we have a newly identified ascending trend line, which you can see here after connecting the series of higher lows since the beginning of the week. So this is what we are going to be using to guide our trading activities for today. And what this simply means is that as long as price action remains above this trend line, we shall feel comfortable in our buy positions while we also look out for more opportunities to buy the GBPUSD. But if at any point in time today price action breaks down this trend line to the downside, something like this, then we want to start considering selling. So now with this information we have here, let's zoom right into the current structure to see how we want to be managing our existing position for today. So like I said earlier, we already have a buy position triggered right now, and I hope you have your stop loss. Please, it is very, very important. I've been having some conversation with some of us in the house here personally, where they tell me they don't have stop losses on their account. Well, if you say you don't have stop loss on your account, that means you are telling us that you actually know where the market is going. No one knows, but what we rely on here is technical structures, patterns to have an insight into the psychology of participants in this market, and this gives us an idea of where price is likely going to be going. That what is quoted, likely going to be going. So in that regard, it's a risk we are taking, and if you are taking a risk, definitely you want to have a stop loss to secure the current buy position. And it is very, very important that you use a particular percentage of your affordable percentage of your account side consistently through all your trades. So in this situation here, we want to have our stop loss below the previous low here, which will be dovetailing to about 20 pips thereabout. And if you want to give more room, you can move it to the key level at a 1.259, which might dovetail to about 25 pips stop loss on this one. So that is how we are going to be managing this trade. Let's see how price action plays out. This trend line here continues to guide our momentum to the upside. As long as price action remains above the trend line, we feel comfortable in our buy position. Now, in as much as we're looking out for buying opportunities in this market, we always want to also take into consideration the potentials of the sellers. Anything could happen. The financial market environment is a very fluid place to be, and for us to be profitable, we want to be as dynamic as possible. So when we are holding on to a bias that we are looking out for buying opportunities, we also want to consider the potentials that the sellers to have in this market. And with that being said, what do we want to see on this chart that will make us change our bias from bullish to bearish? Well, if you look at this current market structure here, we already have a trend line, which we said we are going to be using to guide our trading activity. So if at any point in time this trend line is breached to the downside, then at this point we want to start considering selling the GBPUSD. But in this kind of scenario, we are not going to be having a sell stop order in this case, and the reason is simply because this is a very strong bullish momentum since the beginning of the week. We would need more confirmation that sellers are finally taking over the pace in the market, and this would always reflect on the chart as a retracement phase to test the structure. So once we have a breakdown of the trend line, we want to scale down into our lower time frame. It could be the 5 minutes, 10 minutes, 15 minutes time frame, or even as low as a 3 minutes time frame, to look out for retest of either the trend line that was broken or the 1.26200 level. But most importantly, we want to see signs that buyers are finding it difficult to climb back above the trend line and the level at the 1.2620. So this would reflect on the chart as a continued selling pressure below the structure. Then at this point, we want to consider selling the GBPUSD. And if price action goes on to break through the key level to the downside, retest, then we want to be adding more position to our existing trade. And remember, our key level, whenever price action remains below the key level, you know that we want to be looking out for selling opportunities. So this is how I'm going to be trading the GBPUSD today. So I already have a buy position triggered right now. Let's see how many pips this is running, and let's see how many pips. So it's running with about 15 pips right now. So I think we could move our stop loss to secure this current buy position, so that worst case scenario, if price action takes us out, it's going to be at break even, no loss, no profit. So that is that on the GBPUSD for today. If you have any questions, feel free to let me know right in the comment section. So I will be checking the comment section from time to time while I move on to the next instrument. So the next instrument we are going to be looking at today is the XAUUSD. Another very profitable trade for us in the last 24 hours is this commodity we have here. And in fact, since the beginning of the week, we have been quite profitable on this commodity. So let's quickly run through how the week started for us on the XAUUSD. So we saw here our price action was initially caught within a range between the $1,961.20 level and the $1,954.50 area to give us a structure to work with for the week. And you know how we do it whenever we have this kind of simple setup. We want to wait for price action either breaking out of the resistance line for an opportunity to buy, or breaking down the support line for an opportunity to sell. Though at the beginning of the week, we saw the breakout of structure happen here. We saw it break out here after having our buy stop order above that structure. And in fact, price action moved about 68-70 pips in our favor. And you know how we do it when price action moves significantly well. We want to move our stop losses to secure the current position, so that whenever price action moves against us, we are not going to be taken out in a loss. And that was exactly what happened. We were taken out with some small profit there, and this led to the breakdown of that bullish trend line that was supposed to be our yardstick for the first day of the week. So this trend line here, we said on Monday that this trend line also shares a confluence with that key level at the 1,960, and with a sell stop order below the 1,960, we had our first sell position for the week triggered. And as you can see, we saw price move about 100 pips in our favor, moved our stop loss accordingly to lock in profit or secure the position, and we saw how we were taken out again as buy pressure resumed. And yesterday's live session, I emphasized the potentials of sellers around this area, where I said since we already had a breakdown of this bullish trend line, there is a high chance that price could come back to retest the trend line to incite another wave of bearish momentum. So I told us that we want to be very careful and patient around this area, as price action was within a range, a very important range between the 1,965 and the 1,960. This range was what we identified at the beginning of the week. Let's run through that quickly. Let me show you for those who had missed out. So at the beginning of the week, we had this range identified here. So between the 1,965 and the 1,960, had been a major determinant of price action in the last 6 to 7 weeks in this market. So I told us all that if price action remains within this range, we want to be very careful and then place ourselves in such a way that we can catch an opportunity only if we have a significant confirmation. And in that regard, during the CPI data yesterday, we had a whole lot of volatility in the market, which took us out on both positions in a loss. I shared that update on my public platform. Let's look at that quickly. On the XAUUSD, I shared an update as regards to the volatility in the market during the CPI data. So it was so massive that price action was just triggered our buy stop, triggered our sell stop order, took us out on both positions in a loss on that one. But thank goodness we were able to recoup the loss and even made more after that. So this is what happened yesterday. Okay, this was what happened here. So I told us all here that trade close, stop loss reached. So the trades were closed in loss due to the high level of volatility in the market. We need to exercise patience and observe the candle's closure at this point, allowing the price movement to stabilize in a clear direction. Stay tuned for further updates. So I did an update immediately, I think about 30 minutes after that one, that as the market influx gradually stabilizes, we are reverting back to the status quo indicated on the chart, resetting ourselves for new opportunities. And now look at what happened. We had our sell stop triggered, had another sell stop triggered, and price action continued to ride to the downside here, giving us over 200 pips in profit on that one. So congratulations to everyone. Though we had some losses, but we were able to recoup whatever we lost, which is a very good scenario for us here in this community. So this morning I shared an update here this morning as regards to the new setup we have here. So this was what I was able to come up with this morning. So I said here that after successfully securing over 200 pips from our sell position yesterday, we are now observing a resurgence of buy pressure in the market. The price has tested the 1,940 zone. Remember how important that zone is. We are going to be looking at that in a moment, which is recognized for a strong buying power. Market participants are currently focusing on the FOMC meeting as a potential catalyst. To navigate our trading activities today, we would rely on the recently identified ascending trend line as a point of reference. We will delve into this trading setup extensively during our upcoming live session. So this was what I was able to come up with this morning, and I did an update on the 30 minutes time frame where I identified a simple setup that we are going to be using to guide our trading activity today. So let's go into the live chat and let's see what I was trying to explain here. So this was what I saw this morning. I saw price action after testing the 1,940. If you remember at the beginning of the week, we had the 1,940 as a very, very strong demand zone. Let me go into the 4 hours time frame so that we can see things clearly here. So this was the 4 hours time frame at the beginning of the week. Remember, we acknowledge that price action has been ranging in the last couple of weeks between the 1,980 and the 1,940 zone, giving us a level of indecision in the market right now. And for the fact that in the last couple of weeks, we saw our sellers have found it difficult to break through the 1,940, it was a clear sign that this was a very, very strong demand zone. And what we said here is that if price action comes back into that structure and we start seeing another wave of buying pressure around that area, we want to start considering buying again. And look at what has been happening here in the last 18 hours or so. We saw a sharp rejection of the 1,940. Price action continued to find bullish candle afterwards, which for me is a sign that buyers are again accumulating positions again with an attempt to push price to the upside. And at this point in time, selling the XAUUSD will only make sense if we do have a breakdown of the 1,940 that is taking out all the buy position around that area with some liquidity, which would reflect on the chart as a retest of structure to incite a sell-off. In fact, a breakdown of the 1,940 might likely incite a very, very strong bearish move to the downside. But since we are yet to see the breakdown of that structure, we want to consider buying again at this point. So scaling down into a much more lower time frame, so I was able to identify something on the 30 minutes time frame, which I said we are going to be using to guide our trading activity today. And this is what we saw here on the 30 minutes time frame. So I already have a buy position trigger, though the move is still not yet significant at this point, as I'm currently running with about 18 pips in profit, not that much anyways. So this was what I saw here on the 30 minutes time frame, and I shared this update this morning. So I said here that we can see that price is ranging between the 1,949.50 and the 1,940, that very strong demand zone we identified earlier. And coupled with that is a trend line which has been supporting higher lows here. And so we have a trend line. So this trend line here will be a reference point for us to guide our trading activity today. So what this simply means is that as long as price remains above this trend line, we feel comfortable in our buy positions, while we also look out for more opportunities to buy the XAUUSD today. And stop losses sitting somewhere around here, dovetailing to about 45 pips stop loss there, just right below the previous low. Let's see how far this momentum is going to go. Then if price action goes on to break out of the 1,960, remember another key level there, then we want to be adding more position to our existing trade. So for me personally today, selling the XAUUSD looks more reasonable if price action breaks down that strong demand zone at the 1,940. But we could also maximize the potential of that bearish move. That is, we could join earlier before it even breaks down so that we can maximize that move. And the only way we could do that is if price action breaks down this bullish trend line at any point, this trend line here, if price action breaks down this trend line at any point in time today, and then retest of structure happens where we start seeing signs that buyers are finding it difficult to climb above the trend line, then at this point we want to be considering selling. So we want to see something like continuous selling pressure, then we could sell right there. Then at the point we have a sell stop order below the 1,940 to be part of a bearish move to the downside. So this is how we are going to be managing our position on the XAUUSD. So this trend line here, you want to mark this out on your chart, 30 minutes time frame, mark this level out, and let's use it as a yardstick to guide our trading activity for today. Price remaining above that level, we want remain comfortable in our buy position, and if a breakdown happens, then we want to start considering selling the XAUUSD. So that is my view here on the XAUUSD today, but trust me, I'm going to be with you in the comment section of both my trading view and Telegram platform to give you updates as at when due, if there are any new interesting setup coming up. So with that being said, here we shall be moving right into the last pair for today, which is the USDJPY. So on the USDJPY, we really have not seen a huge traction that will give us significant amount of profit on this instrument for this week so far. And in fact, in the last couple of weeks now, the market has been very, very choppy, caught with being range bound for so long, where giving us an insight into the level of indecision in this particular market. But at the beginning of the week, we had our key level spotted around the 139.650 area, as you can see here. So that was where our key level is, and you know how we do it with our key levels. If price remains below the key level, we look out for selling opportunities, and if price action remains above the key level, we look out for patterns that will support a bullish momentum. And the week started on a bullish note actually, as we saw. Though it didn't move very well, we had price caught within a range between the 139.650, our key level, and the 139.270 area. So for the first couple of days this week, price action was very rangy, as you can see here. It was very, very rangy. And yesterday we had a stop loss hit here after price. Okay, I think it was not a stop loss. I think we moved our. Okay, yes, I mentioned here that we should move our stop loss to entry point when we had a breakdown of the structure. So we had a break even at that point. Then with a buy stop order above the resistance line at the 139.650, we had a buy position triggered as well. And since then, price action moved about how many pips was that? About 65 pips in our favor before this whole consolidation phase started yesterday. And this morning I shared on my public platform that we should all secure all buy positions at this juncture as we wait out to see how price action will be reacting to this level. And one thing we have noticed here this morning is that price action has been rangy between the 140.300 level and the 139.900 level, and this is a sign that price action is going through an indecisive phase, which is as a result of the upcoming major events from the US docket, and majority are looking forward to what the data is going to be like, what is going to be coming out from Jeremy Powell's mouth today. So as a result of this, people are patient, is a little bit risk averse at this point, and we also want to be as patient too as possible. And you know how we do it whenever we have this kind of simple flat channel like this. We want to remain patient, wait patiently for structures to mature, which is always going to come in the form of either a breakout of the resistant line of this flat channel to give us an opportunity to buy, or the breakdown of this support line at the 139.900 level to give us an opportunity to sell. So let me first of all talk about the expectations of sellers at this particular point in time. Now, with the situation we have here, with the flat channel we have here, we are not going to be having a sell stop order below the 139.900 level. And the reason is simply because, one, we have a very strong impulsive move yesterday to the upside, as you can see here, and this whole situation we are seeing here could turn out to be profit taking activity, which always reflects on the chart as a retracement of that impulse leg to incite another wave of bullish momentum. So as a result of that, one, we are not having a sell stop order. That is the first one. Then secondly, price action is sitting above our key level for the week, which is situated at the 139.650. So because of these two perspective here, these two parameters, we are not going to be selling right away, as we want to wait for confirmations that buttresses that sellers are gradually gaining momentum and might likely dictate the pace for today. So how are we going to spot that on this chart? Well, we want to see a breakdown of the 139.900 level happen. Then once this happens, we scale down into our lower time frame. Then we look out for something like a retest of structure, continued selling pressure below this area where buyers find it difficult to break back above the 139.900 level. Then at this point, we could start considering selling the USDJPY, then have a sell stop order below the 139.650 to add more position to our existing trade. So only if we have a breakdown retest of this level can we start considering selling the USDJPY for today. So let's keep this in mind. Let's write this down on our journal, and let's fall into the compulsion of just selling right away. We are still above a very strong key level which supports bullish momentum, and the last impulsive move here is bullish, and we might likely be going through a retracement phase at this point. So that is that on the expectations of selling the USDJPY for today. Now, the other scenario here that could happen is that following the impulsive move we have here, there is a high chance that price action could transition into a trend continuation pattern where the breakout of the 140.300 will incite a trend continuation to the upside. So as a result of this expectation, and considering the fact that price action is looking more bullish in the last couple of days here, I'm going to be having a buy stop order sitting above the 140.300 area to join that bullish move to the upside. So I'm having a buy stop order there, then with a stop loss sitting somewhere around this area between the 140.00 level and the 139.900 area, which will be dovetailed into about 30 to 35 pips stop loss, and let's see how far this momentum will go. Now, one thing I would like to say here before I close on the USDJPY is that it's very important that we also look at the holistic perspective here. Now, if we scale up into the 4 hours time frame, this was what we saw on the USDJPY. After taking into consideration the activity of price action since the beginning of last month, and one thing we saw here is that price action had remained on the bullish side. As you can see, we have higher highs and higher lows, and when we connected these levels together, we were able to spot the simple ascending channel which has been guiding our bullish momentum since in the last 6 to 7 weeks. Now, with the situation we had here, in addition to that ascending channel, if I zoom in right now, you will see that since the last week of the month of May, we saw our price action broke out of the 138.650, and since then that level has been a major buying niche, negating all attempt by the sellers to break through the structure. And for this fact here, I'm of the opinion that it's still looking very bullish in this market, considering we are on a very strong bullish momentum, an ascending flat channel, a strong demand zone around the 138.00 level, and price actions struggles right at the support line of the ascending channel to initiate a bearish momentum. It's more or less a sign that buyers are still very, very strong and sellers are struggling to dictate the pace here. And now, coupled with what happened yesterday with a strong engulfing bullish candle, as you can see here, is still a very beautiful sign that buyers are still having a say in this market. So we want to be very, very careful at this particular point in time. And not only if price action breaks down the key level at the 139.650, can we now feel confident and comfortable in a sell position, while we also wait for a breakout retest of the 138.800 to add more sell position to our existing trade. So that is why I have said here that we are going to be having a buy stop order above the 140.300 level to join a trend continuation to the upside, as it is more likely that price action will climb to the upside. But if the opposite happens here and price drops below the 139.900 level, retest of structure, let me show you, let me give you a visual representation of what I'm talking about. So if price drops below the 139, I told us all we are not having a sell stop order. We wait for a retest of structure on our lower time frame. So as soon as we have the breakdown of that structure, we scale down to our lower time frame. It could be the 15 minutes, 10 minutes, 5 minutes, or even as low as your 3 minutes time frame. Look out for retest of structure, signs that buyers are finding it difficult to climb back above the 139.900 level. Then we could join a bearish move and have a sell stop order below the key level at the 139.650 to be part of the trend continuation to the downside. Then you could have your TP target around the 138.800, where depending on how price action reacts to that level will now determine if we are going to be buying again, that is buy pressure resumes, or a breakdown will welcome opportunities to sell. So that is my view on the USDJPY today, and trust me, I will of course be with you in the comment section on both my TradingView and Telegram platform to give you updates as at when due. And it's on this note I want to call it a day here. It has been a wonderful moment, and I'm very confident that we are well equipped to be able to take advantage of any potential trading opportunities during the New York session and London session today, as we were able to simulate all the potential trading opportunities that could come up on all the charts of the instrument we are monitoring so far this week. So I wish you best of luck during the London and New York session today, and trust me, I'm always with you in the comment section, hoping to see you right there in the comment section on both my TradingView and Telegram platform as we continue to monitor price action. Do have a wonderful day, everyone. Bye-bye.